You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is time once again for the Futures Rundown. My name, of course, Mark Longo from the Options Insider Radio Network. Your home now for 19 plus years of options goodness, and for the last year and a half or so, futures goodness as well. So make sure you're listening to the full network. Otherwise, you're missing out. Speaking of missing out, if you're not hanging out on the Pro, man, you missed out on something awesome. Vol Deathmatch 2.0 was yesterday. It was our good buddy, the Flow Master, Mr. Henry Schwartz, against Scott Nations, with special guest referee who got up to some skullduggery, Mr. Russell Rhodes, a.k.a. Dr. Vix. A good time was had by all, except the loser. A lot of blood was shed. It was a good time, at least for us watching. Maybe the participants, they had to slug it out. Maybe it was a little rough for them. But you know what? Check it out over there on the Pro, theoptionsinsider.com/pro. It is the place to go to get your hands on Vol Death matches, as well as other exclusive shows and live streams and giveaways and all sorts of fun. TheOptionsInsider.com/pro is the place to go as we go around the horn, see who's joining us on this episode of the Futures Rundown. I'm pleased to welcome back on our old pal, Miss Carley Garner from DeCarley Trading. We haven't chatted with her on this show since early December of last year, so a lot's gone on, including we've lived about 5 lives in the metals since then. Carley, how you doing?
Good to be here. It's only been a couple of months, but it feels like a couple of years.
Yes, it does feel like a couple of years in the market. So without further ado, let's get into them. Let's enter the trading pits.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody. Welcome to the Trading Pits, the portion of the show where we break down all the action in the wild world of futures, and they certainly have been wild to start the year. We have a lot to break down, but before we get there, like I said, Carley, it's been a couple of months since we've checked in with you on this program. I'm not sure if you've noticed, but a lot's been happening in the world of futures. What's been catching your eye, madam?
I have absolutely noticed. I mean, I think it's pretty obvious that metals are moving. People are focusing on metals in the commodity space. But I've actually been paying quite a bit of attention to Bitcoin. It's not a market I trade or put recommendations out or really mention much in my newsletters. But I've noticed, I think everybody's noticed, there's generally a pretty positive correlation between stocks and Bitcoin. often when Bitcoin either tops or bottoms, stocks follow. It usually takes a couple of months for that to happen, but we've obviously seen very significant top in Bitcoin. And we've seen a lot of individual stocks follow, which is kind of to be expected, but we haven't seen the major indices, the Nasdaq, the S&P follow it. I'm just wondering if maybe this time is different. Maybe the markets have disconnected, or if we're just getting a delayed result. So I believe, I could be wrong, but I believe Bitcoin might be headed for about 30,000. I know that sounds really low, but if we basically repeat the double top pattern and sell off that we did in the last cycle, that puts Bitcoin at 30,000. And why that's meaningful to me is it probably means the Nasdaq and the S&P are way too high. So that's what I'm watching.
Wow, I didn't have Bitcoin on the docket for you right out of the gate. So yeah, you threw me a curveball there, which I like. I always appreciate a good curveball out there. And you're right, it has been, I think, to put it mildly, a challenging time in the crypto space. You know, if you keep this up, Carly, we're going to have to bring you on our crypto show. You down to talk some ETH and Solana and everyone's beloved Shiba Inu, Carly?
Well, let's not get too crazy, but I'm taking baby steps.
There are futures on Solana now, so it's getting there a little bit at a time. Let's see where we're getting in these markets right now, listeners. And as I mentioned, it has been a wild start already to the year. Again, we're only a month and change into the year, and we've done a lot of living. You could call it quits on the year right now, and there'd be a lot of action to digest. But you know what? That trend is continuing this week. Let's go to the green. Let's go to the upside, because why not, listeners? Let's keep things positive and uplifting. And it cost you about 3.85% to break into our top 5 on the week this week, and that gets you to our old pal Oats. Oats are much more of a futures story than they are an option story. We've talked about this many times on the sister program to this one, aka TWIFO, that Oats move. Oats clearly move as a contract. It's just they don't deliver on the volume front from an options perspective. But again, from a futures lens, a little bit more attractive of a product, and up about 3.85% this week. In a similar realm, up about 3.9%, we have our old pal heating oil. And then we jump up a little bit again to number 3. It's one of the EMs. Can you guess which one, listeners? Nope, not uranium. It's lithium. Lithium's been a frequent offender on the show of late. What did Jamal call it on the show last week? He said, that's a party when lithium's involved. We got a party today, up about 5% again this week is lithium. So kind of an interesting time. Again, not the most liquid of markets out there, but still an interesting one, something to pay attention to. Number 2, the complex that is my nemesis. It is dairy. I like it. I just can't have it. It doesn't like me, listeners. It's non-fat dry milk, up 6.2%. And the banger of the week, which I guess you can argue this complex is a little overdue for a little bit of upside. This is OJ, up nearly 16% this week. This is a product that has been beaten down for well over a year now, just being annihilated just about every time we talk about it. It is the breakfast beverage that is offsetting the skyrocketing cost of your coffee. So this week, getting a little bit pricier. Carly, anything catching your eye in the uber sexy world of oats, heating oil, lithium, non-fat milk, and OJ, madam?
I do have a couple comments to make. I mean, first of all, speculators get a lot of flack. There's this aura that speculators interfere with market price discovery. And I would say maybe it's the opposite. I think this is a good depiction of that. You can see most of the week's movers and shakers, how, as you say, are generally lower volume markets. And that to me is indicative of lack of liquidity, lack of speculation. So next time you want to complain about speculators, take a look at some of these thinly traded products. They're a little more volatile than the liquid stuff in general. Not always. That's a blanket statement. The last thing is, I love to see oats on this list. Oats is a market that doesn't get a lot of attention. As you mentioned, the options are very thin, and the futures are pretty thin also. You have to trade it with limit orders. The bid-ask spread, even on the futures, is anywhere from 2, 3, 4 cents sometimes. Lucky, maybe it's a penny. But it's a little bit less efficient to trade oats. But the nice thing about it, it hasn't been infiltrated by ETFs or over speculation. It's a little thin, but it's liquid enough to trade, and you're not going to get nearly as much chaos and speculative frenzy and things like that. Now watch, I'm jinxing it. They're probably going to list an oats ETF.
I was going to say.
And start talking about it on Bloomberg now. But for now, it's a pretty nice market to trade.
Here comes the oats frenzy. You called it into fruition here, Carly. But I wouldn't mind personally seeing a little bit more action in oats. I've lamented for years that there's no options volume on this product, and it clearly moves. It clearly merits one, just for whatever reason. Structurally, no one wants to trade oat options. They trade like 3 contracts a week. So I wouldn't mind selfishly having something to talk about on TWIFO. So yeah, I wouldn't mind a little bit more action there. Oats and lumber have always mystified me. They certainly move. They have the vol. They just don't have the options volume to coincide with it. But that's a conversation for another show, listeners. Let's keep rolling to the downside now. Let's go red and see what's lighting up our tape. And it cost you, interestingly enough, it's a very symmetrical week. It cost you about the same amount percentage-wise to break into the downside that it does to the upside. And also, our top mover, our top offender are both similar percentages as well. So we have a very symmetrical week, including number 5, a product Carly might have a thing or two to say about. This is our old pal Nat Gas. It's actually kind of a quiet week for Nat Gas, only off about 3.6%. In fact, half of our downside is 3.6% this week, because that's also where Bitcoin, the micro and the big futures are coming in this week. So collectively holding down the number 4 spot. They are the same product at the end of the day, listeners. Number 3, a rare color we're not used to seeing in the precious metals, let alone in silver. It's some red. Silver, again, it's only off not even 4% so far for the week. So not exactly a rock'em sock'em day when it was moving 10+% a day not too long ago, but still giving back almost 4% to the market gods this week. Number 2, another rough week for rough rice. In fact, when isn't it a rough week for rough rice? Off about 8.5%. And the big dog to the dark side this week, another one that's had, let's say, a challenging year and change out there. It's cocoa, off nearly 15% this week, 14.8%. So some wild stuff. I see your beloved Bitcoin in our dark side this week, Carly, but I want to get your thoughts first off on number 5, because I know this is a product that is near and dear to your heart. You're not here talking to us. You're out there talking Nat Gas to the folks over there at DeCarly. I pointed this out on the show recently. I'd like to get your thoughts on this. It seems like if you played Nat Gas this year in the most cliche way possible, which is you bought futures or upside in the options, whatever your poison is, heading into the coldest weeks of the year, which are usually mid-January, and then you sold it immediately after that, you did pretty well. And that's the most textbook way I can ever imagine to play Nat Gas. And yet it seemed like it worked out this year, Carly. Do you agree?
It did work out this year. I would say most years it generally doesn't, because what normally happens in natural gas is the market anticipates the cold weather, builds in a premium, and then the cold weather doesn't deliver. But this year was just a gangbuster on, surprising weather. And we got what we got. And I do, hopefully anyone that was long calls going into that were able to sell them, because that was such a really, really quick move. And it's also a reminder that even though there's a lot of kind of cottage industries out there that have tried to make a living on being, basically perpetually selling nat gas futures or perpetually selling nat gas calls, because as we saw this year, rallies are generally strong and great selling opportunities, and they generally don't last very long. There's few years that sneak up on people and really cause some havoc, but in the big scheme of things, we've seen this before. We saw it in silver up until this year. Selling silver in the 40s and 50s was, maybe even 30s was a really high probability bet until it wasn't. And so that's how nat gas is. Every decade or so, we wipe out people on the upside, but the majority of time, it's a sell the rallies type of market. You just have to be careful not to be over leveraged, obviously. And being short calls or short futures during the winter months, it's going to work more often than it doesn't. But when it doesn't work, it's going to be really, really treacherous and maybe even account blowing. I do want to mention something in cocoa, though. The interesting thing about cocoa, which is the biggest downside mover this week, is almost exactly 1 year ago. Let's say 13 months ago, cocoa was trading at the highest price we've ever seen cocoa trade at $13,000 a ton. nobody in the world ever thought cocoa could get that high. And it was one of those frenzies, kind of what we've seen in various markets. Currently, I think, in my opinion, I think the metals are getting that frenzy. But cocoa is now trading under 3,000. In fact, it's close to, I take it back. It's right above 3,000. My fault. I do expect it to go to about 2,600. That'll actually get back to the trend line that we started at before all the hoopla. But it's kind of, this is a market, the reason I point out, it's putting on a clinic of how commodities work. When a commodity is on the annual green list, meaning it's had the best year of all commodities, it's generally the one that has the worst year in the following year. And so we're seeing exactly that in cocoa. And the reason being, when prices get that high, everybody changes behaviors. The manufacturers were using less cocoa and more palm oil. They were making smaller chocolate bars, so consumers cut back a little, and then you get this oversupply glut and demand waves, and you get the boom and bust cycle that happens over and over and over again in commodities.
A lot of wild stuff. You're right. Cocoa has been a wild story. And you're right. Going back to what I was saying about nat gas, that trade shouldn't work because it's been priced in, and yet it worked to a T this year. So
it sure did.
Just absolutely wild stuff out here in the markets. Is it a wild day today in the world of futures, listeners? The answer is yes. We might have to revisit our 300,000 contract barometer to break into the top 10 because we're blowing past it a lot these days. Maybe we need to up it to 400K. What we are going to do is up it to a top 15 because I like to see some other product categories sneak their way into there as well. And if we just keep doing top 10, it's always going to be dominated by the equities and the rates. Not that there's anything wrong with that. It's just that's what's lighting up the tape out there. Let's do a top 15 for fun, see what's lighting up the tape, maybe beyond the top 10, which is equities and rates for days, including number 15, going to the equities, but maybe an interesting contract that a lot of people are focusing on right now. This is our old pal, the Russell 2000, putting up 130,000 contracts for the number 15 spot. Number 14, a product we don't see in our top 10 very often, but makes it onto the top 15. This is corn, 145,000 contracts for that. That is a May contract, by the way. Number 13, to the realm of FX we go. Man, getting all kinds of wild stuff in the top 15. It's the Japanese yen, the March contract, 170,000 contracts on the tape today. Number 12, to the rates we go. It's the Ultra T-Bond March contract as well, 301,000. And then number 11, another product a lot of you like to key on and also having a pretty active day out there. It's our old pal WTI. We're on again. We're off again with Iran. We're sending carriers. We're talking peace. They're shutting down the Straits of Hormuz. A lot of back and forth in the oil sector right now, and that's reflected in our old pal WTI. Number 11, 345,000 contracts going up in the April contract in WTI. So again, we get a nice little break from all March all the time, which is pretty much the rest of our top 10, including number 10. It's the Nasdaq E-mini, again, the March contract, 423,000 contracts. Number 9, our lone departure from March in our top 10. It's 3 months SOFR, once again going out to the end of the year to December. About 450,000 contracts on the tape there. Number 8, the 30-year, 481,000 contracts. Number 7, jumping up about 80,000 to the Ultra 10-year, 561,000 contracts on the tape. Number 6, jumping up quite a bit again to the number 6 spot to the 2-year, 893,000 contracts on the tape for the 2-year. Number 5, to the equities we go, including the S&P Micro, 956,000 contracts. What could top that? Well, the big dog, the E-mini, 962,000 contracts. So a pretty active day out there again today. Number 3, the 10-year. Man, the 10-year all the way down at number 3. That's kind of wild. 1.5 million contracts exactly. What could kick the 10-year from its usual perch at the top of our most active list? Well, it's a frequent offender, which is the Nasdaq 100 Micro, 1.51 million contracts. But there's something else lurking in there. What else could kick both the 10-year and the Nasdaq Micro to the curb today? Well, it's going a little bit farther down the curb, but not as far as the 10-year. We're going to the 5-year. The 5-year note putting up 1.6 million contracts today. So kind of a wild top 15 today, Carly. We got a little bit of everything. We got some crude oil. We got some FX in the form of the yen. We've got some ags in the form of corn. We've got a product a lot of people are watching these days, which is the Russell 2000. And then we've got a maybe weird evolution on the yield curve with the 5-year note sneaking into the top 10 spot. What's catching your eye out there today, madam?
It's definitely a well-rounded list. But what catches my eye is the two markets that are not on it, and that's gold and silver. And the reason I bring that up is I had mentioned on social media, and I can't remember if I mentioned it on the show, maybe not. A few media outlets I mentioned that the gold and silver rally and then decline and all the chaos and the volatility. I personally believe it's been, I think it probably was going to happen before, but I think it's been exacerbated by basically the viral meme stock type of frenzy and ETFs. And I was, received a lot of pushback. A lot of people seem to think that gold and silver are very, very large markets that couldn't possibly be meme stocked. But I just don't think that's necessarily true. Gold and silver market can mean a lot of things. There's cash market, bullion market, your local pawn store. But the most centralized place to trade is here on the CME. And you can see that although they're high volume contracts, they're not anywhere near the highest volume contracts on the board. I do still believe that they are much thinner than most people believe they are.
Well, yeah, just the fact that we hardly ever talk about them in our top 10, let alone our top 15. Again, today, you're right. They're not breaking in. Along those lines, a lot of people were looking towards CME to potentially pump the brakes a bit. They have in the past when the metals got frothy, they raised margins. They did do so again, but they kind of did so a little bit late and maybe not as aggressively as some folks might have thought. What were your thoughts on that? Did you expect them to raise them more, or did you think that was the appropriate amount?
I've been critical in the past of exchanges, particularly going back to cocoa. I think the ICE exchange was very slow in raising cocoa margins and allowed that to get out of hand. So I'd be the first one to complain if I thought that was the case. To be honest, I think the CME did a pretty fair job. I just think that the mindset and volume and motivation of traders, for whatever reasons, everybody has their opinion on that, were just so overwhelming that I don't think the margin increases mattered. And also you have to keep in mind, if there is money coming in from inverse ETFs or those sort of things, margin's a little less important, right? They're, retail traders have to obey the margin rules, and they have probably tighter accounts. Whereas I would assume those funds would have much bigger accounts, and maybe even doubling the margin isn't going to affect the number of contracts they trade because they're constantly having inflows and outflows. Anyway, I actually think the CME did a pretty good job. The margin is really, really high, even on, micro silver. I think the last time I checked it was about 15, 16 grand on a micro silver. So, and they also even revamped their margining system. You probably talked about this on the show, but they've gone from a dollar amount to a percentage. So it fluctuates with as the market goes up, the margin gets higher. And I think what's been most interesting to me is the way that they have increased margins so quickly, and the lack of reaction by the market. It's kind of been known in commodities, when the exchange starts raising margins, it usually pops bubbles, and it really didn't do that this time. I mean, it eventually kind of led to a pretty sizable pullback, and we have yet to see whether or not that was a bubble pop or not. It's just too early to tell, but it did create a little bit of friction on the way up, but it's also caused two-way volatility, and it's been just really a messy market. But I'm going to give the CME a pass. I think they did a pretty good job raising margin. In hindsight, they could have raised more and maybe thwarted some volatility, but without knowing what we know, I mean, we're talking about the most volatility in the history of gold market, unless maybe you go back to 1979. So without hindsight, I'd say they did a pretty good job, in my opinion.
Yeah, definitely a challenging period to navigate. It was interesting as well, because on the one hand, they're raising margin. On the other hand, they're creating new, more bite-sized products for retail to trade silver through. So
yes,
it was interesting stuff. Again, there's no silver bullet, pun intended, at the end of the day for how to deal with these things. It was just interesting to see how all of that played out. Let's see how things are playing out so far year to date. Again, listeners, we've done a year's worth of living in a lot of these products already, including, of course, the metals. That goes without saying. In fact, let's go to the upside right now, because that's where we sink our teeth in. Number 5, gold. So silver not making it on our list right now after some shocks to the system. We'll see if that's the case again next week. It could be up 30% from where it is now. Who knows? Right now, Number 5 on the year-to-date gainers list is gold, up about 14.5%. Number 4, we're going out to our old pal crude oil, but not WTI. It's the international flavor, Brent. That makes sense. You'd expect Brent to be a little bit more subject to what's going on over there in the Straits of Hormuz and reflecting that a little bit more. And that is the case. Brent up about 16.25%. Number 3, it's our old pal heating oil, up 17.2%. Number 2, going out to the ags. It's soybean oil. We were talking soybeans with Kevin Green on the show last week, up about 20.1%. Suddenly, that's hot again. It's obviously an aspect of the China trade, and it seems like soybeans are hot or they're not, depending on what China's doing. And right now, we're definitely in a hot phase. Again, soybean oil, number 2, 20.1%. And the big dog, once again, I think they do this just to mock me. It's non-fat dry milk, up 27.7%. Interesting stuff there so far year to date. Obviously, gold making it on our list still this year, Carly. We don't talk heating oil that often. Again, it's not the sexiest of markets, but probably an interesting one over the last few weeks. So if you have some thoughts there as well. And then we haven't had a chance to really talk the beans yet. So you have any thoughts there as well? Have at it.
Well, I'll be 100% honest. I haven't looked at a non-fat dry milk chart.
How dare you?
A very long time, but this conversation is enticing me to go take a peek at it and just see what's going on. And as far as soybean oil and soybeans, generally speaking, like it's kind of been a habit over the last 3 to 5 years that we tend to get the highs of the year, or at least close to the highs of the year, around now. So, we're working with some hedgers, and we're basically encouraging them to make sure they mind their downside risk, because in my opinion, we've probably seen what we're going to see on the upside of soybeans unless Mother Nature surprises us. In addition to seasonals, I just worry. I think the US dollar is probably trying to put in a bottom, and I know that's an unpopular opinion, and I've been saying this for a while, and it's been trading sideways and hasn't gone anywhere for several months. But I do think that we're kind of forming a base, and if we move higher, that's going to make it really tough for a lot of these commodities to hold their gains.
Carly, while you were talking, I just pulled it up, and the April non-fat dry milk contract, which is what's topping our list right now, has traded a whopping 59 contracts today, madam. So might be a very easy thing to chart. 59.
Oh, no ETFs in dry milk. Maybe I'll take a look.
Yeah, there we go. Maybe we need to speak some of those into existence as well. So again, read into some of these movements in the dairies with a little bit of a grain of salt. They aren't the most liquid, pun intended, out there. Class 3 milk is dominating the tape right now with about almost 800 contracts on the tape. In the March contract, about 600 in the April contract. So add them together, you're talking close to 1,500 contracts. So again, a mere drop in the bucket compared to what some of the other things we're talking about, like the 10-year and the E-mini and all that fun. Speaking of fun, to the downside we go, listeners. Number 5 to the downside this week is a product, again, we talked about with Carly recently. If you played it as textbook as it gets this year, you're sitting pretty right now. It's nat gas coming back off its recent highs, off about 6.5% so far year to date. Number 4, we're going out to coffee. Coffee giving up the ghost about 14.5% this year. So that's good. It has a long way to go. If you're a Starbucks aficionado, you have a long way to go till you're back at a, dare I say it, tasty level in coffee prices. But at least for now, you'll take what you can get, including number 4, I should say, to the dark side, 14.5%. Number 3, we've got a product. Carly is a new aficionado of. It's Bitcoin, off 25% so far year to date in both the micro and the big futures. And unfortunately for a lot of the hodlers out there, ETH is back on our list and slotting into the number 2 spot for the year, off 35, almost 35.5%. And the big dog, once again, to the dark side. Carly was just talking about it. It's cocoa, off a whopping 45% here year to date. So some wild stuff. Carly, you mentioned you're getting lured to the dark side of Bitcoin a little more. Has that extended to ETH? ETH has been a wild product to watch over the last year. It's been topping our gainers. It's been topping our losers, sometime within the span of a few months of each other. We haven't talked about coffee. It's been a wild run for that one. And then, of course, your beloved cocoa, madam.
Right. So I'm really not following Ether that closely. So I'm going to just skip that one. Going back to cocoa, honestly, I know cocoa, we just talked about how cocoa has been a perpetual decline, but I didn't realize that year to date. So we're talking just 2 months, it's dropped that much. That's really, really wild. Kind of absurd almost, but commodities can be absurd sometimes. What I will say is coffee, which is second on the list, down about 15% on the year. I think coffee is going to repeat cocoa. I think coffee is the new cocoa. Coffee rallied a couple of years ago with cocoa, little after cocoa, but for the same reasons: soil damage, farmers dropped off during the bear markets. We had some weather issues, tight supplies, all the usual suspects. Currency markets worked in their favor. But I think all of that's reversing like we've seen in cocoa. And I wouldn't be shocked to see coffee with a one handle by the end of the year. So that's my best guess on where we go with coffee.
Well, Carly, that music means we've come to the end of our sojourn through the world of futures. But before we tie things up with the bow, we touched on a lot of different products. But perhaps there's a complex or a product that didn't make it onto our list that you want to mention to the folks. If so, have at it, madam. The floor is yours.
Well, we had it on our actives list, but I think Treasuries is really something that's interesting to look at. It's been a dead market for 4 years. It's just been a dog. And I've been waiting for something to change there. And I think we're finally starting to show signs of life. So keep your eye on Treasuries. If you look at charts, we're starting to break out on monthly charts from very, very long downtrends, 4-year downtrends. Now, today we're getting a little bit of a pullback. That's to be expected. I mean, on a daily chart, we're beyond Bollinger Bands on most of the Treasury products, but keep your eye on them. I think we're shifting from sell the rips to a buy the dips market, and so stay tuned.
All right, and if folks want to stay tuned with you over there in DeCarly land, maybe check out a book or two. Where should they go? What should they do?
Sure. So you can visit our website, decarlytrading.com. You can sign up for a free trial of our newsletter there. You can find some information on our brokerage services. We are a boutique brokerage, futures and options brokerage. And we also have a Substack. So if you're interested in Substack, go to decarlytrading.substack.com, and you can also sign up for a trial there. And if you're interested, if you don't want to open an account with us as a broker, but you want the educational material, you can sign up for our newsletter on Substack. It's only $25 a month. So it's pretty affordable.
All the cool kids hanging out on Substack these days. I got to get over there and join you and Mr. Passarelli from my last show and your nemesis, Dr. Vix, and a whole bunch of others hanging out on Substack. Check it out, listeners, if you are so intrigued. That's going to do it for us on the Futures Rundown today. Not going to do it for us on the network. We'll be back after the closing bell to break down all the action in the world of options with our newest addition to the network, the Hot Options Report, aka Mr. Thor Odinson. Then back again tomorrow with the Option Block and the sibling program to this one, This Week in Futures Options. Friday, of course, Vol Views, and we're back with all of our pro friends to talk some unusual activity from options oddities. Hopefully they've rested up by then from the bloodletting that was the Vol Deathmatch this week. And then, of course, we're back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.